This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, June 21st, 2016. Euro dollar. So with the euro, we're in a bit of wait and see right now. As you can see, the market continues to chop around in consolidation mode, and the key levels that you want to pay attention to above and below are 114.16 above and 110.98 below. I realize that's quite a big range, but again, it's unclear at this point whether we get any clear move unless we break above 114.16 or back below 110.98. If we take out 114.16, it'll open the door for a retest of that key 2016 high at 116.17. And if we break back below 110.98, it will open the door for a more accelerated move to the downside towards that 108.23 base that we saw going back to early March. Again, until we see a break on either end, expect continued choppy trade. Sterling dollar. So cable has continued with its impressive surge out from those recent lows just shy of 140, with the market now breaking all the way back towards the multi-day range highs up towards 147.70. So over the past couple of days, we've seen a test of the recent range lows and now a test back towards the range highs. But ultimately, this market does remain confined to a broader range over the past several days and weeks, and so additional upside could have a hard time beyond 147.70 or beyond 147, ahead of 147.70 with this consolidation range intact, and the bias continues to favor selling rallies towards the range highs and buying dips down towards the range lows. Dollar yen. So dollar yen has continued to see pullbacks, with the market now trading just off that recent multi-month and yearly low from last week at 103.55. At this point, deeper setbacks should not be ruled out, with a break below 103.55 to pave the way for continued downside towards the next key measured move objective in the 100 area. At this point, we could see some consolidation or a bit of a correction to allow from some recently oversold daily studies to unwind, but ultimately any rally should be very well capped ahead of the 107 area. Euro Swiss. So a nice bounce in Euro Swiss, with the bounce coming as no coincidence with the market being very well supported down towards the 108 area over the past several months. This bounce could open the door for the next rebound towards a retest of the recent range highs, which come in around the 111.30 to 112 area. At this point, we would need to see a clear break back below 108 and certainly below that 107.13 low that we saw going back to August of 2015 to really compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie has seen a nice correction out from recent lows at 71.45, and the market at this point is unsure whether it wants to put in a lower top ahead of a bearish resumption or continue a bit higher towards the next key resistance in the form of the 61.8% fib retracement off of the 2016 high to 71.45 move, which comes in at 75.70. But ultimately, any rally should be very well capped up towards 75.70, with the market expected to roll back over in favor of a continued bearish momentum. Dollar CAD. So dollar CAD has seen recent setbacks extend back towards and below 128, with the market now gravitating potentially back towards key support at 26.55. But 26.55 is a critical level to watch because right now it acts as a potential higher low above that 2016 base at 24.61. But in order for that higher low to be confirmed, we need to hold above 26.55 and see a move back above that recent significant resistance at 31.89, that high going back to the 24th of May. A break above 31.89 would open the door, would confirm 26.55 as a higher low, and open the door for the next major upside extension towards the 135 to 140 area. Kiwi dollar. So Kiwi has come back under pressure into Tuesday, with the market once again stalling out ahead of that recent 2016 high at 71.48. But again, the market will need to see a break back below 69.63. That's the low from the 15th of June to really put the pressure back on the downside. Initially, we see support come in from Monday's low, which comes in around 70.50. But again, we would need to see a break back below 69.63 in this market to put the pressure back on the downside. SPX 500. So although we've seen a bit of a bounce in recent trade in the S&P 500, overall the market continues to show signs of topping out after rallies fail out and or stall out at above 2100. We saw a record high at 2133 back in 2015, but since then it's been a major broad consolidation with rallies up above 2100 stalling out in favor of significant declines. So recently we saw another stalling out above 2100 and ahead of that 2015 record high, which does suggest we could see another major downside move in the days and weeks ahead. But we would need to see a breakback below 2020 to really confirm or strengthen this outlook and accelerate those declines. Gold. So gold continues to be very constructive at this point, with the market showing good signs of the formation of a major base and recent setbacks being very well supported ahead of previous resistance now turned support in the 1190 area. At this point, the recent break back to 2016 highs, taking out the 2015 peak, trading up to as high as 1316 thus far, does set the stage and pave the way for the next major upside extension towards 1400 in the days and weeks ahead. Any setback should be very well supported ahead of 1200.